Wall Street doesn't collapse by accident. It collapses when confidence becomes untouchable. In the late 1920s, Americans believed the stock market was safe. Banks said it was stable. Newspapers called it a new era for the United States economy. One trader quietly disagreed. Not because he hated Wall Street, not because he wanted chaos, but because he understood how markets really fail. He didn't predict the 1929 stock market crash by luck. He didn't manipulate prices or control institutions. He recognized a psychological pattern, the same one that still drives markets today. When optimism becomes unquestionable, collapse is no longer a possibility. It's a schedule. His name was Jesse Livermore, and his story was never taught properly, because it reveals how fragile market confidence really is. This isn't a story about trading strategies at all. It's about crowd psychology, power, and why markets repeat themselves. And once you see what he saw, you'll never hear the phrase market confidence the same way again. If this already feels uncomfortable, that's not an accident. Subscribe to Empires of Finance. We don't chase noise, we study the structures behind it. It began with a runaway and $5. In 1891, a 14-year-old boy walked away from a farm life that promised nothing but repetition. His name was Jesse Livermore. Poor, unnoticed, statistically irrelevant, the kind of boy history usually forgets. This is Empires of Finance, where history doesn't repeat, it whispers. Jesse didn't know it yet, but the road he took that morning would eventually lead him to Wall Street, to enormous fortunes, and to equally devastating collapses. His father wanted obedience, stability, silence. Jesse wanted none of it. He had seen poverty long enough to recognize its most dangerous trait. It teaches people to stop expecting more. Numbers spoke to him differently. Not as equations, but as rhythm. While others memorized arithmetic, Jesse noticed repetition, acceleration, hesitation, the hidden structure beneath chaos. His mother noticed it too. One quiet morning, she handed him $5 and told him to leave. A small act of rebellion that would echo through financial history. Boston introduced Jesse to the real classroom, a brokerage house. His job was to write stock prices on a chalkboard as they streamed in from the trading floor. To most clerks, it was noise. To Jesse, it was language. Price movements weren't random. They were emotional reactions. Fear disguised as numbers, confidence printed in chalk. By watching long enough, Jesse learned to anticipate the next move. Not because he knew the future, but because he understood human behavior. His first trade confirmed it. The money didn't matter. The realization did. He wasn't guessing. He was reading the crowd. That moment created a new kind of trader. Not one driven by rumors, but by psychology. Yet hidden inside that clarity was a danger. The same mind that could decode chaos would eventually crave it. America was industrializing. Factories multiplied, markets expanded, ambition became contagious. Jesse watched the nation's heartbeat printed on ticker tape and understood something early. Markets move faster on emotion than on logic. He studied relentlessly. While others went home exhausted, Jesse left with a mental map of greed. Some people inherit power, others learn its rules. Jesse saw the code, and if history teaches anything, it's this. The same patterns that build fortunes eventually demand payment. For now, imagine the boy at the chalkboard, listening to numbers no one else could hear. The market speaks. He listens. At the turn of the century, America was a machine learning how to move fast. The Industrial Revolution transformed noise into opportunity. Factories roared, ticker machines clicked endlessly. And in that chaos, Jesse Livermore found clarity. He moved to New York, drawn to larger markets and sharper emotions. By his early 20s, he was already a millionaire. Newspapers labeled him the boy plunger. They thought he was gambling. They misunderstood the process. Gamblers roll dice. Jesse studied repetition. In 1906, after the San Francisco earthquake destabilized markets, Jesse shorted stocks ahead of the collapse. He made $250,000 in a single day. Adjusted for inflation, millions. Success didn't addict him to money. It addicted him to certainty. Then the pattern inverted. Bad partnerships. Overconfidence. Jesse lost everything. Not because the market betrayed him, but because he believed he couldn't be wrong. Markets don't punish arrogance immediately. They wait. Jesse learned that lesson repeatedly. Each recovery pulled him higher. Each fall carved deeper scars. Because in markets, repetition without reflection becomes destruction. Tell me, if you'd built and lost a fortune before 30, would you walk away or double down? Prosperity has a sound. In the 1920s, it was jazz and ticker tape. America believed progress was permanent. Credit flowed freely. Ordinary citizens bought stocks on margin. Wall Street sold confidence like a product. Jesse rebuilt again. He built an intelligence network across continents, tracking crops, steel, bonds, interest rates. Information became leverage. By 1928, optimism crossed into delusion. Taxi drivers gave stock tips. Newspapers promised endless growth. Jesse recognized the pattern. Rising leverage, tightening credit, valuations detached from reality. He began shorting quietly. When the 1929 stock market crash arrived, it wasn't chaos. It was confirmation. 16 million shares traded on Black Tuesday. Banks collapsed. Families lost everything. Jesse Livermore made over $100 million. But wealth built on collapse doesn't feel like victory. It feels like isolation. When a nation mourns, profit becomes a burden. Would you have taken that bet? The Great Depression wasn't only economic, it was psychological. Jesse became a symbol. Newspapers blamed him. Threats followed. Wealth became a prison. At home, his family collapsed. Alcohol replaced dialogue. Distance replaced trust. The man who read markets flawlessly failed to read his own life. Regulation arrived. The Securities and Exchange Commission changed Wall Street. The environment Jesse mastered no longer existed. His instincts betrayed him. Trades failed. Confidence cracked. By the mid-1930s, he was bankrupt again. In 1940, inside the Sherry Netherland Hotel in Manhattan, Jesse Livermore ended his life. His note called it failure, but his story wasn't about losing money. It was about limits. You can beat the market. You cannot short your own humanity. Decades later, traders still whisper his name. His methods shaped modern market psychology. His downfall warned what happens when pattern recognition turns inward. Markets evolve. Human behavior doesn't. Algorithms trade faster. Data moves quicker. But greed and fear remain unchanged. Jesse Livermore proved the market isn't mathematics. It's psychology. In every bull run and every crash, his shadow returns. If you've ever chased success so far that purpose disappeared, you already understand the story. So ask yourself, if you could see the pattern of your own life, would you change the trade? In the end, Jesse Livermore's story doesn't conclude. It fades, like the final glow of a ticker tape machine slowing to silence. The numbers stop moving. The crowd drifts away. And what remains is the echo of a man who once thought he could outsmart chaos. Maybe he did. Maybe that was the problem. History never tells us what to feel. It just leaves the evidence. A boy runs away with $5. A genius builds a fortune from air. A nation rises, convinced it has mastered greed, and then forgets that greed always learns faster. The market crashes. The world rebuilds. The pattern resets. Different players, same rhythm. Somewhere out there, another mind is studying the same fluctuations, convinced they've seen something no one else can. Maybe they're right. Maybe that's how it always begins. And as the lights fade on Jesse's story, it's hard not to wonder whether he was chasing the market, or if the market was chasing him all along. Either way, the lesson doesn't sit on the surface. It lingers, like dust in the air after the storm, waiting for someone curious enough to breathe it in. If you're still here, You're not just watching a story. You're listening for patterns. Subscribe to Empires of Finance, because history doesn't repeat itself. It whispers. Until someone is paying attention. Empires collapse. Markets recover. But the questions, they tend to outlive the answers.